Evening to you, ladies and gentlemen. 6 p.m. we shall get started. Thank you very much for joining me. If you who are just jumping in, fine, I can catch up. We start off as always with the disclaimer, the risk warning, leave it up there for a few seconds so that you, if you're not familiar, have a little look, and it's just to make sure everyone understands this is a risky business. And if you've been trading for a while, you know this is a risky business. You've played the game, you understand. But if you haven't, then yeah, please check out the risks and understand what this game entails. Yes, there's good upside, but there's downside too. That's the way of the world, right? Okay. Today, what are we doing today? So we're going to talk about following on. We've got a series of webinars going, and I'm trying to keep the kind of theme and just go to the next thing and next topic and kind of keep a little one foot in the previous theme and kind of blend them all together. So after this series, you should have a selection of really what I'm trying to do here is just to highlight some strategies that might be interesting to explore more. I mean, they're absolutely not a turnkey system. It's not something just to go out straight away, but kind of ignite. You know, I've always, when I was in my first 5 years of trading, so 2001 to 2006, you know, I would go out and I just kind of get little ideas and things and I'd explore them myself. And that was how you kind of build your own system and strategy, right? So that's really what I'm trying to do here is kind of explain a few different things. The odd one or two thing will ignite something in your mind and you'll go, hey, you know what, I want to go out and explore a little bit more. Others you'll go, that's not for me, it's not my style, it's not my thing. So I'm going to give you an array and selection of different things so you can kind of look at the buffet and pick what you like. So today we're going to talk about trading the close. And nice little quote there, the two most powerful warriors are patience and time. God, they're so apt with trading. And I always, you guys, if you've been on here before, you know I like to pick a stoic quote or some sort of famous quote and have it as a parallel with trading. That's definitely the case. Okay, so yeah, today we're going to talk about, actually before we move on to that, let me mention that next webinar, a couple of weeks time, we're going to go back to the open. We're talking about a very specific opening range breakout. Some of you are very familiar with that, some of you are not, but I think that it kind of adds an extra layer onto this kind of structured part of the day focus. So we talked about the evening session, which was just not quite the close. The close to me is, well, we'll define in a second, is right at the end of the trading day. So US session close is what I'm calling it. Now, we're going to focus on the products that actually close. I mean, nothing really closes anymore, does it? I mean, you can still trade stocks after hours, you still do this and the other, depending on who you're trading with. But what we're trying to focus on is different times when you can focus your energy and effort. Because if you're someone who, even if you have got time to sit there all the trading day, you don't want to, right? But many people have got other commitments, other things to do. And what you want to do is you want to be able to go, right, hey, I want to block off this chunk of time and I want to prepare in this chunk of time and I want to execute in this chunk of time. And when you're a bit more programmed like that, then you know what you're looking for and you have a selection of things that you're screening for, you're looking for the setups and strategies. It's a bit easier to kind of deal with the fact that you can't be in front of the screens all day, and also to deal with your energy levels and focus levels, right? So let's get cracking. There is a Q&A section. If you want to ask your questions there, I will get to them at the end. The pace of this will be a little bit slower than last time. Last time I know we were rushing through, I'd crammed loads of stuff in there, but a little bit slower this time. We'll take our time, but I've got some good things to share with you guys, and anything you don't get, you want some more clarity on, absolutely feel free to hit the question section. I don't mind whatever the question is. I'm more than happy to address it. All right, so today, topics, 3 separate strategy buckets: scalping the last 15 minutes, VWAP magnets. Some of you are very familiar with this. I think we've touched on this before, but I want to kind of add a few little additions that I think are probably going to come into play this year. They've certainly reared their head a little bit over the latter half of last year. I'll share those with you as well. And the overnight follow through, which is like a scan and trade to really take advantage of moves that might be starting to ignite, and you just kind of, I'm jumping ahead here, but just give you a sort of head start and says, okay, I'm not executing this specifically as a day trade potentially, even though it's a day trade as execution, day trade as risk, but I might want to hold this for a 1, 2, 3 day play. Something I like to do quite a lot, and I'll share that with you. And as always, a reminder, this is information purposes only. You know this, guys. Always do your own research, always dig around yourself into any strategy or anything like that. It's not just from me, from anybody. The way you build confidence in the market and the way that you build a robust system is by getting little bits, researching them yourself, going, aha, I've seen this, I've seen that. And I'll show you a slide in a bit actually, which kind of goes into that bit more detail. But that making it your own is really the secret to it. So let's go. I've got my water here, got a bit of a sore throat, but I'll get through it. I've got my water. We'll see how we go. So apologies if there's a few croaking going on, but it's not a problem. But I don't want you to think, gosh, she's dying over there, because I'm really not. I've got water here to combat that. All right, so defining the close as GMT 8 p.m. to 9 p.m., which is 3 p.m. to 4 p.m. Eastern. That's how I'm defining it. Now, if you were looking at the European markets, possibly you could look at the 4:30 close for the FTSE and the DAX, and make it your own. There'll be some adjustments you'd have to make and some considerations you'd have to take into account. But I don't see any reason why you couldn't take some of these things, especially the scan type setup and stuff. So again, flexible. You just adjust it. And what I like to share with you is, I'm a big fan of understanding the reason why something's moving. Now, not necessarily the reason as in, well, PE ratio is this, and there's none of that sort of stuff, but understanding, getting a story behind, or digging into the price and saying, okay, well, listen, the trend is extended here. That's why when we're pulling back, we're snapping back here. That's why this, that's why that. That little feeling that you get and rhythm and reading those waves and cycles of the market. It's not always possible. One thing I always say is, I think a lot of the time the market is random, right? You look at the market, you go, hey, I've got no idea what's going to happen next. And that's the time you step out. That's the time you don't get involved. Unfortunately, it's the time a lot of traders do get involved. They try to solve it. They look at it and they go, I think it's going up. I think it's going down. And they take a stab. Rather than the patience, going back to the initial slide, of saying, okay, listen, I don't know what's happening next. I'm going to wait until I see some clarity, some evidence to suggest that there's a repeatable pattern. So the market random, I believe the market a lot of times it's random, excuse me, as the first croak, random, back and forth, people ping-ponging, making trades, nothing really going on. And then now and then we get little anomalies where the spring gets stretched, supply demand shifts. There's an ignition sort of movement. There's there's something to indicate that that's a repeatable pattern. And that's what we're trying to do with traders, right? We're not trying to guess or be clever or do anything super smart and solve the market. We're just trying to say, hey, listen, I don't know what's going to happen, but sometimes I've seen stuff that I've got an idea that this thing could happen. And sometimes I see stuff that's a precursor for this. And so there I'm going to kind of try to position for that. I'm going to wait for that. I'm going to structure my whole strategy and system around, I don't know what's going to happen next, but sometimes I've got a good idea. And sometimes I can express that idea with a limited risk. And even better, sometimes I can express that idea with a limited risk and a reasonable upside. And that's all we're looking for in any of this thing we're trading, the close, trading the open, trading the trend, whatever we're trading, we're trying to express an idea that we think has got a high probability of success. We never know, but it's got an easy way to quantify the risk and it's got a decent amount of upside. And if we can package all that together and we trade that over time, then that's what works out in the wash and hopefully gives us the outcome we're looking for. So don't be, I'm going to track a little bit here, but don't be disheartened when you look at the market and you go, I don't really get a good feel of what's going on. I don't really, can't see anything, because that's normal. And you should listen to that and not trade. And the worst thing you can do, listen, depending on where you are in your trading journey, you're going to be seduced by just any movement. You're going to end up trading. But what is a good thing to do is to say, hey, listen, go back and look at some of your results. And even if they've not been so great, you go, hey, listen, genuinely, if I'd stuck to my plan and my strategy, how would I have done? And so if that had been actually a decent result, you can look at it and go, well, you know what, some of those substandard trades, some of those trades where I took a guess, some of the trades out of boredom, out of FOMO, whatever it is, if I eliminated those, where would I be? I'd be in a much better place. So, consider that and always be kind of scanning for edge, because that's all our job is as traders, right? It's just to find edge, execute, 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 execute. All right, that's the close. Why trade the close? So, you've got this potential urgency situation, and the reason the close I think is effective is I know that many of us are trading products via CFD or spread bet, and some of the products are trading 24/5, right? So we go, is there really a close? Well, actually there is, because the New York Stock Exchange bell open, New York Stock Exchange bell closes, and yes, some stocks do trade in the after hours, but the liquidity is very, very low. Options are closed, some products are closed, and yes, there is some, there's a little bit of a spillover, a little bit of movement, but volume is much, much lower in the products if they're even open at all. And so what tends to happen is money's flowing back and forth around these type of things. You've got market makers, you've got ARB guys, you've got big funds moving stuff. You know, funds aren't going to be shifting things during the aftermarket. That's a sweeping statement. I know what every fund is doing, but generally speaking, if you want to shift volume, you're not going to do that. So the close is quite an important time. You know, it's a cutoff point where everyone's going, geez, you know, I've got to get my stuff done, get my business done before the bell, because after that I have to wait until tomorrow. Anything can happen. We can have a gap, we can have this, we can have the other. So potential urgency. Supply demand imbalance can be quite high at the open, again, because of that urgency. The market, it could often quickly pull back to a mean because it's kind of stretched, and then all of a sudden it just shuts off that buying or selling. That's this VWAP magnet we'll talk about, and I very, very quickly can fill that liquidity gap and shoot back to the moving to the VWAP. And the market could just be setting up for a multi-day run. So I know that many of you are here are day traders, right? But if you are open-minded, okay, and even if you're not, maybe this has been interesting anyway. If you're open-minded and going, okay, you know what, I don't mind having a swing trading portfolio. I don't mind having a system perhaps that looks for these 1 to 3 day runs. I don't mind having that sitting there, maybe small size, maybe in a demo to start off with, alongside my day trading strategies and buckets, and segmenting them out in your mind. Then fine, because you know that if you scan up to a daily chart, the market often, you know, what it does intraday is often a precursor for a kind of a daily chart pattern. So, you know, sometimes the market does like a V-shaped reversal, then breaks out of a level, as a range break fake, all that type of stuff. That can often be the start of a multi-day move. And what we're going to talk about is how we can set ourselves up to scan for those, and then potentially take advantage of that as a day trader looking at the screen, and be ready to take advantage of a potential further move. All right, so let's get going. Before we get going, we need to be prepared, right? And I know that you go, oh God, boring preparation, checklists, all that. This is, I know that this isn't the sexy stuff, right? But this is the stuff that is the separator. You know, that you're preparing and you're planning, and not just necessarily aligning yourself with conditions, which valuable, super valuable. We need to know what to trade and the market conditions and what weapon to use for the conditions, right? That goes without saying. But not only that, but to prepare yourself mentally. There is something cathartic and that puts you in a professional mindset when you sit down at your desk, you stand at your desk, whatever you do, and you run through a process, a professional mindset process, you know, a thinking as, you know, someone who's doing this, you know, in a very, very considered manner. Preparation is key. Calibrate yourself with the conditions. Review your plan. Screen for your opportunities, whether they're the intraday stuff, scalping the 15 minutes VWAP magnet, or the multi-day play, which we'll cover in a moment. Identify the market or markets you'll focus on. Don't go crazy. Jot down those trade ideas. I think I showed a while ago, kind of little scroll, ridiculous things that I do, where I just kind of think about price and I go, right, how could it go from here to here if that's my idea? And kind of jot out, yes, it could break, come back, and put those ideas in my brain so I'm prepared and ready. Get yourself clear of distractions, and then you're ready to operate. You're ready to operate. You're ready to be focused. You're ready to trade or potentially trade, and you have that mindset that's in the right place. Okay, so don't overlook that, guys. I know I can make jest of it, but honestly, that really does just click something in your mind when you're prepared and focused. And from an operational perspective, it puts you, you know, in alignment, hopefully, with the conditions. All right, scalping the last 15 minutes. So this actually is, I toyed with including this or not. It's like, oh, it's not happening so much, but what it does is really good. Shall I include it? Shall I not? I thought, you know what, I'm here to share everything I think is of value, and I'll be totally honest with you about, you know, how often this thing potentially occurs and all this type of stuff. So I've included a mixture of things tonight to cover. So scalping the last 15 minutes. So the idea of this is that, and by the way, you could expand this a lot. If you were someone who's interested in trading this kind of aggressive style, you can build this and grow and see kind of paths that find there's some value, come back, test out different things. So anyway, thesis is on a big trend day, the final 15 minutes often a rush to get the last of the orders done. We talked about that. If you imagine you are a hedge fund, mutual fund, whatever it may be, and you are instructed to buy, I don't know, a couple of million shares of whatever it may be. And you're kind of trying to get these done, and you're kind of getting the orders. And most people are using automation for this. So imagine it's either automated or someone on the phone. They're trying to get them done. They're kind of executing. They're trying to not move the market too much. As it comes to the last sort of 15 minutes of a day, often people are like, hey, I've got most of it done, but I need to just get more aggressive now. I need to get stuff done. I need to get out of this position because I do not want 10% of the position overhang to the next day. That's not what I've been mandated to do. I'm mandated to clear this position off today. I'm on track, but maybe I need to accelerate things a bit. And algo is a program like that as well. I went down a rabbit hole a couple of years ago of studying algos, getting white papers, getting PDFs from investment bank, all this type of stuff, and looking. I'm not a developer, but I understand the kind of the concepts, and a lot of these are sort of show in flow charts what happens. And very often, they're built in a way that will guarantee a fill or guarantee it to be done, and they'll kind of split the order up throughout the day based on volume and time. You're talking about a VWAP algo, and the last 15 minutes, hour, they sort of turn to a more aggressive mode. They put on an aggressive mode, they call it, and that's when they're kind of hitting bids if they're selling, hitting bids, just to get it done, because it doesn't really affect the average price that they've transacted at across the day, but it just means they're getting done. So we, as short-term traders, if we can identify days where that might happen, and we can imagine, in my crazy mind when I'm looking at the markets, I can imagine all these algos going aggressive mode now and kind of hit that bid, hit that bid, hit that bid. It just gives us a little supply-demand shift. And that supply-demand shift is something we can take advantage of. We don't really care. They don't care. They don't care about price. They just want to get the order done. But we do care about price. If the Dow moves an extra 100 points in the last 15 minutes, and it's been down 400 or 500 in a day, that's great for us, right? That's a potentially profitable opportunity. So the aim of this is to capture, trade the direction of the trend, and attempt to capitalize on that price urgency. So that's the thinking behind it, right? Like I say, I always like to think, what the idea is behind it, and have some sort of rough evidence to back up why this could work, rather than just looking at candlesticks and going, okay, it's candlestick, yeah, fine, but there's a story behind it, there's people behind this trade, algorithms behind it. So I amended this to say short side only. In the current conditions, I'm going to say this, unless the upside is a surprise move, trapping traders, i.e. we don't want a grinding uptrend. You want a nice, aggressive, short move. And generally speaking, why it's more effective on the short side is just because most people are long, right? Mutual funds are long, a lot of the investment funds are long, ETFs are positioned. Fear is a greater driver of transactions than greed, I believe. And so when you have, just think about that. That's a really good way of thinking about it. Like, okay, if you're fearing, the majority of people are in fear, they're going to execute quickly, like, get me out, 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 rather than greed. Get me in, I'm going to miss out on this. Yes, that is a potential driver, and we have those supply demand shifts, of course we do, but actually, it's really the fear that's the big one. So unless there's a short squeeze and there's a fear of people losing money from the short side, then trade this as a short trade. Okay, so a few more little parameters, and get some screenshots of charts. Filters, we want the market to have been in a trend reprice scenarios, trading literally in the last 50 minutes in the last 20% of the trading days range. So big percentage moves, and it's the lows, simply put, right? It's a very simple way to screen this thing. Big percentage move, large volume, key levels of support broken, everyone going doom, 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 no real sign of any bid. Maybe it's been consolidating at lows, all that type of stuff. Now, this isn't everyday type of trade. You're not going to get this every single day. But if you, again, it's one of these things, if you kind of go, right, I've got the idea for this, I know how to trade this, I know what I'm looking for, and how to screen it, it's a process you can do. You go, hey, what's the day type? Choppy. This is definitely not going to be one of those trades. Oh, this day is getting hammered. Okay, let me go a little bit further. Let me look into it. Big percentage move down, check. Large volume, check. Support broken, check. Looks like bad news as well, check. Okay. Now I want to still trade it strategically, but how am I going to trade it? So the trigger here is any kind of classical entry. And some people say, well, all these breakouts don't work and blah, blah, blah. But the edge, I believe, is the directional bias by picking the day that's actually getting battered, and the supply demand is shifted so much, and you're using the last 15 minutes because that's the urgency section. You're not getting involved a little bit earlier. We talked about how to get involved in it a little bit earlier with that little pop. It's a slightly different trade, a different setup. That was in a previous webinar. We talked about that little pop-up that rolls over. That's a different structure. It's much more calmer, much more considered trade, a little bit of a wider stop. This is, okay, I'm still going to trade the short side. I'm still going to get involved in this, but I'm waiting until they are just running for the door, and the door is very, very small. That's what you're trying to do. And so the directional bias is really the edge, and the screening for that is the edge. And the triggers can be a break and retest. I've got a couple of examples at the moment. As in breaks through, comes back, classical breakout trade, ignition bar after a spike. So you kind of had that spike up, We've seen this loads. We see this a lot recently, actually. Little spike up, looks like it's going to rally and then just whom, come straight back down again. I love those at the moment. I think they're nice. Resistance support, pin bar type things. So any regular type things. I think complicated about the entry as such. It's the directional bias that's the edge. So stops, again, you'd use something like a nice fixed percentage of ATR or behind that trigger bar. We'll look at some examples in a second. Targets, important on this. You want the new intraday lows or highs if you're taking the short squeeze. Again, very, very unlikely. It's very, very rare, I think, if that sets up. It's better off on the short side only or the closing bell. And it's one that you can take and you've got your risk managed, your risk is capped, and you go, I am not, and this is one for you. If it's you who meddles with the trade, who always takes the trade out too early, this is a good one to take because you take the short side, you see a setup, you get a little bit of cushion, you put your stop to a sensible level you feel comfortable with, and you walk off, you put your timer on, alarm, and come back at the closing bell. And you say, right, what will be will be. Either get stopped out, I'll take this 1 hour hit, or it could completely collapse in the last 5 minutes, and great. So it's a good kind of exercise as well for stretching that muscle. Okay, so a couple of examples here. We've got Dow. This is Pepperstone CFD product of the Dow equivalent, effectively. And this is the broad outline of the day, right? The day, so you can guess. We're going to zoom into the actual, the trigger in a moment. But just to give you an idea of, this big heavy down day, started up, tried to fake out to the high side, and it's just been smashed throughout the day. 2 tests of the VWAP, couldn't really get up in the second point, and just pushed lower and lower and lower and lower. We are heavy down day, we've got reasonable volume, and we're in the lower 20% of the trading day, coming into the last kind of 15 minutes. Fine, great. How do we deal with this? So let's zoom in a little bit. One slide too many. Okay, so we're zoomed in now, and we look at this last 15 minutes. Remember I talked about the break and retest? This is the type of thing. So the prior day's low was already marked off here. And we kind of tested it, it was holding. We broke, we came back, and we came back just after that 15-minute period. So you're watching, you're waiting, you're saying, okay, it's broken. Are we gonna go? And eventually, people just can't, bulls just can't do anything with this, and it crumbles and it collapses down, and there's a reasonable, decent trade there. So this is the low you've marked out. 8:45, 15 minutes before the close. You're like, okay, it's at lows, but I'm not taking it I'm not randomly just selling 8:45. That'd be foolish. You still need some kind of trigger, right? You need some kind of trigger. And at that point in time, you're like, yeah, I need a pullback, I need this, I need that, I need something. Maybe I'll take a break after a pullback. So you might have taken it, come there, nothing comes back up though. But then you go, right, what's the standard technical entry here? Would be a pullback to a key level, after a break. Classical stuff, basic stuff, but it's effective. You've already got your low mark from the prior day. It's struggled to break through it, so you say that's reasonably holding well. Starts to poke back up, comes back down, and on that close there, you go, okay, that's probably worth it. In the last 15 minutes, it's really struggled. I've got something pushing above it. I've got that resistance, but it's like pushing down on the ceiling on price. It's really struggled. Every time it's popped above, it's the one pop above and struggled. Momentum's down, the trend is down, lower 20% of the thing. 15 minutes until the bell, or less than 15 minutes now, 7 minutes until the bell. Is that a scalp trade worth taking? Up to you, of course, but to me, that's like, okay, I've got a lot of ducks lined up that's made you work it potential. Hold until the close, take it, you put your stop in. Where'd be logical place for this stop? I appreciate this is hindsight, guys. I appreciate this. We've got to use some kind of example, but your stop would be above that level there, and you come back at the close and you go, thank you very much. Not going to make loads, but it's there, and it's the idea is that you're capitalizing on that sense of urgency. And you can even see kind of that last 4 bars, it's really kind of picked up some steam relative to everything else. So give me another one. This one's Tesla. So as you trade Pepperstone now for Tesla on TradingView, and again, let's look at the bigger picture. And honestly, I'll give you 2. I've picked 2 Tesla charts. It's sometimes uncanny, right? You look at it and you go, God damn it, is it the same chart? No, but it's so similar. And that's what we want as a trader, right? We want to see a chart that we go, I've seen this chart 100 times before. I've seen this. I know how this ends. And maybe, it won't end like that, but I've seen this. I know how to structure the trade. I know how to play the game. Let me position for it at least. And waiting for the time you look at a chart and go, I've seen this damn chart before. I know how this movie ends. I know where to put my stop and structure it. All right, so this is like the broader picture here. Tesla down, gap down, very, very weak market, holding, but eventually it kind of rolls over. Okay, so we've got the backdrop for this week, high volume, lower 20% of the range, tick, tick, tick for the filters. What do we get? So at this point in time now, we don't get, it's a slightly different setup, right? We're waiting. The key level's there at 10.55. It breaks in the last 15 minutes, actually on that quarter two candle, breaks, it's a breakout trade. You're like, okay, I've seen it, it's weak, it's struggled, it's not popped up. And let me go back one more. You can see the low, it's tried, it's already below that kind of intraday low from early in the day. It's putting that extra low print in, it's bouncing up, really struggling with this resistance, starting to roll over. It's worth a go because you're saying it's, again, you're capitalizing on the urgency, and especially when you're trading something like a stock that has got a bell. Yes, there's some post-market trading and after-hours trading, but the volume is very low generally unless there's earnings. So no one's really doing much business, right? No one's chucking around, millions of shares in a minute or so. It's just not going to happen. So if you want to do some decent-sized business in Tesla, if you're a mutual fund, hedge fund, big boy, girl, you have to do in the market, and that bell's coming. That bell's coming in 15 minutes, and it's already at lows. It's already getting absolutely battered. That's where we go. Okay, I think it's a supply-demand imbalance here. I don't know, but if I'm going to use that bar as a kind of trigger entry, and this is a 1 minute bar, and you might be a little bit aggressive, but to highlight the pattern, you might say, okay, there's the break, close below the break, put the stop above the bar. Then we just see if it works. I've seen that this generally will push into the close. I don't know if it's going to work or not. The risk is a couple of bucks per share on this. I'm happy to take that. It could just capitulate, and it was actually quite an aggressive trade. That now, remember that chart. Let's go back to the next chart. The same. It's a different day. I promise you, it's a different day, right? A week apart. But look how similar that damn pattern is, right? It's the same type of thing. Yes, it's the same instrument, but the pattern is so similar. You've got a week. It actually gave the bulls a little bit of a chance at the beginning, but then, after a couple of hours, it was just holding at lows, well away from the VWAP. And then the last 15 minutes, again, if I keep scrolling the wrong button here, the last 15 minutes, it does the same thing. The trend just accelerates to the downside. It's like, damn, we've only got 15 minutes left to do this business. Get on it. And they push, and you see that drive lower. So it's that breakout trade, or you're waiting for a pullback. I don't mind that. If you're someone who wants to wait for that, you don't want to. But the idea is not necessarily the trigger. I don't really want to concentrate on the trigger so much. I want to concentrate on the fact that these patterns are very, very similar, time and time again. We're seeing different instruments doing different things. Dow's a little bit, indices tend to be a little bit more two-way, but we still see days where they're sitting at lows. It's that consolidation at lows. It's not going anywhere. Buyers are not in charge, and you're waiting for the last 15 minutes because everyone's got to finish their damn orders in 15 minutes time. Looking at the watch going, we're not done yet, let's get it going. And of course we use a stop to manage the risk if it doesn't happen, but that's how we do it. Okay, so let's talk about the VWAP magnet trade. So that was a kind of aggressive trade, scalping that last 15 minutes. Let's talk about VWAP magnet. So VWAP is volume weighted average price. For those of you who don't know, I've covered this. I think I've covered this one before, but a little bit different angle of attack today. So the idea is that during a kind of different type of day now, during a range-bound rotational type day, the VWAP often acts as a magnet to pull the price back towards it. Because if you imagine this, and this is, and I want to kind of very, very quickly talk about VWAP and not go crazy. If you want to dig in, feel free. But VWAP is almost always considered the average price, if you like. It is a volume weighted average price, of course, that's the definition, but a lot of algorithms and institutions use that as a benchmark for success for order execution. Again, I got really geeky and nerdy and went into kind of looking at all these institutional algos, and you can make a trade that says, hey, I want a VWAP execution, and institutions will guarantee that you will get, or your order size, I think there'll be some sort of cap on it, but a reasonable order size done that we fill that the VWAP, so that whatever the VWAP closing print is. Now, so what does that mean? So that means that if you have a day where there's not much trend, so if you're trying to get a trend, if you were let's say you were a buyer on those downtrend days, yeah, you're going to be like, oh god, my VWAP feels awful. If you're a seller, you're going to be all right. You're going to have a decent fill at the end of the day because the VWAP is going to be a bit higher. So the rotational type days are a bit different. Okay, and what happens is, again, this is my interpretation of it. It's my interpretation of this. is that as price starts to extend away from the VWAP, especially on days where there's not really that supply demand shift, the VWAP will pull it back in because there's a majority of people considering it as value because it's above the VWAP. So we don't have a big supply demand shift from big funds or whatever, big volume selling or buying shift, making that trend day type scenario. We're getting a bit of two-way rotation. And then as it goes away from the VWAP, it is almost like that spring, and the VWAP sort of sucks it back in like a magnet because algos and people consider that as value and start selling more aggressively the more it gets away from the VWAP. So that takes a while to get your head around, but that's kind of the premise and idea behind the whole thing. This slide perhaps shouldn't be here, but let me just share this with you. Before we go into this, I like to dig into stuff and do some kind of research and bits and pieces and try and find some statistical stuff. I'm not a quant, I'm not a statistician, this is not my bag at all, but I've learned how to do some basic analysis to try and back up some of my price action theories and stuff that I look at with eyeball. You know, I'm very much eyeball, I'm very much supply demand. I can see, I can smell stuff a lot better than that feels like my edge as a trader. But I like to expand things. I like to kind of grow and try different things. And something I thought for this webinar is let me dig out a spreadsheet where I was trying to see if there's any link between the daily range and whether we close near VWAP. And actually, there wasn't that much. You know, I kind of looked at it and went, there isn't really that much link, which is kind of interesting. And really, one day a week you get a close at VWAP, which doesn't sound a lot, but if you can identify the day type, you're in a good position. The whole premise we've got here is to say, how quickly can I identify it's going to be the day that we close at VWAP? And if I think that it is that, then any extension away from the VWAP in that last hour of the trading day can be something that I could take advantage of. And by the way, if you like digging into stuff, you like doing this, why not try it yourself? Dig into the data. If you're an Excel guy, Google Sheets guy, girl, dig into the data, and maybe some themes to think about are, does the volume of the day, if it's lower than average, does that tend to have a link with closing a VWAP? The opening range width compared to maybe the last 5 days is a very low opening range width, tend to indicate we're more likely to close at VWAP. What about how many times a VWAP was tagged during the trading days? All these ideas you can come through, work through and go, okay, I want to crunch the numbers. I want to kind of see exactly if there's any data to back this up. So that was just going off topic a little bit, but I wanted to share that with you. So filters, this tends to work better in thicker markets like the indices, large ETFs, large cap stocks. You get the idea when you've got that two-sided supply demand, because you're not looking for that extension and kind of stretch and panic. You're looking for two-way trade, thick two-way trade, and it moves a bit, comes back, does this thing. Market's been rotational in nature, never extending too far from that VWAP. So it's kind of oscillating back and forth around the VWAP, preferably not getting too far away from it. Trigger entries, looking for any reversal trigger, small double tops, pin bars, anything else you like to see as a reversal. And we're trading in the direction of the VWAP. So we're plotting the VWAP, stretched, we're trading back in the direction of the VWAP. Okay, stops would be above or below your signal bar. So if you see a double top and it rolls over, your stop's going to be above that. If it's an ignition bar and engulfing, it's going to be above that type of thing. Common sense within target, obviously, it's going to be the VWAP. Okay, so we've got one here. Have I gone too far? No, got one here. Okay, I've just used S&P 500 ETF as an example here, because you can see the gap and you can see the sort of type of day it is. A nothing day, right? Above the VWAP, below the VWAP, above VWAP, below the VWAP. Two-way trade. VWAP is flat. That's another thing I should have added, actually. The VWAP's flat, that's even better, because that tends to indicate that, hey, no one's really winning. Anytime price stretches above it, it comes back. And so in the last hour, we want to play that to our advantage and say, hey, if we see price away from the VWAP, either above it or below it, and we see a reversal trigger, that's something we can consider taking. Now, you might look at it and go, the risk-order ratio is not that great, I'm not going to take it. And that's the downside of this. If it's so close to the VWAP, you might not take it. This ignition bar here, it's a reversal pattern. I think we're all agreed on that. Fine. VWAP target, but you might go, stops a little bit wide, the VWAP's a bit close, I'm not going to take it. But you kind of, if it's further away, maybe you would. If it was further down here and it's still holding support and you see the reversal bar in the final hour, you know that the VWAP's acting like a magnet, you might take that. Same with this type of thing, this pin bar, again, we all agree that's a reversal pattern. We know that this is something that happens time and again. then you might want to take that and go, okay, back to the VWAP, but then you might not because of the risk is there. But the idea is that it's a very subtle trade, a very subtle strategy. It's one where you're identifying the 1 day out of 5. And again, the statistics show, generally speaking, that's the sort of numbers. You might get a couple in a row, of course, it's not going to be perfectly one every week, but if you start to identify and you go, hey, listen, it's 5 o'clock. Market's not done a lot. Yeah, oscillating around that VWAP. VWAP's flat, volume's low. Let me watch it. And you come back, you can look at the chart, and it's time this tries to do this, tries to do that. It's not really got away with itself. This is probably a close at VWAP or close to VWAP. There's a good one for non-English speakers, isn't it? Close to VWAP. So you identify that and go, okay, do I want to take advantage of it? And this is not something that's going to be a huge risk reward trade, but it's something that if you I think the reason this can be effective, guys, is that sometimes we can get caught trading chop, right? We see chop, especially if you've only got the last hour to trade. You can get caught trading chop. And what you want to do is have something that you're waiting for that maybe is not home run. Maybe it's not something that you're going to, it's going to grow your equity curve massively, but it's something that stops you trading the chop and slop. It's something you go, hey, this is choppy. It's a VWAP rotational day. However, there's one setup I look for specifically in this day, and you might trade it with small size. You might go, okay, well, if we're extended away from the VWAP, you might add a parameter that says it's a certain amount it's got to be away from the VWAP. That's fine. But the idea is then you're keeping your finger off that damn mouse until you see something that's got a reasonable expectancy. And that's where sometimes having stuff that maybe it's not an A+ trade. Yeah, and I'd agree with you. I'm like, hey, it's not an A+ trade. But it might be the trade that stops you getting caught out trying to take every little thing because you've got an hour to trade, you're sat in front of the screen, you want to do something and you trade. That's not what you want to do. You want to be very focused on it. So that's something to consider. Another one here, I don't like this one so much because it hasn't rotated around the VWAP too much, but when you're I think when you extend away from the VWAP and you hit a level that's very obvious, then you can say, okay, well, the majority of the day was quite bearish. I imagine it's going to get sucked back in. There is a resistance there at the opening range low. I'm going to cover the opening range a bit more depth in the next webinar. What was the last one? That was SPY. This one's XLF, so nice thick ETF. Market oscillating around the VWAP. Again, we have that kind of trade where it comes up and hits resistance. Pretty similar to this. It was a different day, by the way. Pretty similar. It's coming up, and then we're closing almost bang on the VWAP. It's uncanny. It's uncanny sometimes why that works. Again, because it's perceived as value. It's perceived as a credible point of control. It's not a point of control. It's different terminology. It's a point where people consider it as a good pricing point. And again, some sort of reversal pattern. So let's move on quickly to the overnight follow through because I really like this one. This one is sometimes these bigger time frame patterns often start in the session, in the last hour of the trading day, and they're confirmed at the close of the candles. You think about a daily chart, right? Daily chart, sometimes you look at daily chart and go, oh, there's a breakout there, or oh, there's a pin bar there, or oh, there's this, and you don't really see it until you see the daily chart. But what we're doing here is we're kind of preempting it. We're basically saying, okay, listen, the day is not closed yet, so the bar's not printed properly. However, we're in the last hour of the trading day. So much has been done. We've had a big reversal, which looks like a pin bar on a daily. We've had a big breakout. Unless something massively changes, which we'll have a stop for, then I'm preempting a pattern taking shape on the daily chart. And, we can do this as traders who are focusing on the final hour of the trading day. We can say, hey, listen, it's a daily bull flag setting up and it breaks out in the close. We don't need to wait. If we're in the trading day and we know that, hey, unless this thing reverses right back to lows, which, okay, could happen, but that's what I've got to stop for, it's going to close at highs here or near to highs. That's going to look really good on a daily chart. That might encourage other traders in. I want to preempt that. And so what we can do then is position for that and hold that maybe for 1 day, maybe for 2, maybe for 3 if you're kind of that way inclined. But you're preempting a daily chart pattern as a day trader. Because something that we've got as a day trader is the ability to be in front of the screen at a decent point in time. We're not swing trader looking through charts late at night, seeing where the dailies are setting up and then trading at the open and missing the potential gap move. We're there saying, hey, I'm pretty sure this is going to trigger a decent pattern on daily. So let me preempt that a little bit. And unless it goes crazy, then I'm good. I'm in the trade that I want to be in. So the idea here is to scan your basket of markets for the daily chart patterns. And some of my ones I like to trade is a flag pattern. It's very basic, but it's very good. A range break fake type pattern, which is, we talked about this one, where you're kind of breaking out above the high, you're coming back below the low, you kind of have that range pop up, roll down. Some examples coming up in a moment. The outside day, inside day, that's something where you got the outside bar, an inside bar. Very often the next day breaks out of that. And the thief pattern, which those of you who watched the Pepperstone talks event in London, John Bollinger shared that idea of trading through the upper Bollinger, a big range on both days and then closing. But go and check that out for the full rules. But anything where it's like a daily chart pattern, and we're preempting it, we're being, okay, daily chart pattern could set up, but if I catch it early, I've got a bit of a head start. And very often you get this trade and it gives a little bit of cushion, like a little bit of cushion that last hour, because it's setting up and it's supply demand shift. And then you get the added weight of the daily chart pattern setting up. So you're holding it overnight. Obviously, it's an overnight risk and accept that. Next day, you kind of get a follow through. You've got more of a cushion, then you can decide what to do. You're in a lovely position as a trader. So triggers are normally triggered by a price level break. Think about a daily chart pattern. A flag is normally triggered when it breaks through the high. A range break fake is when it comes back through the level. A trend line break, it was normally a level breaking. And so you kind of want to look through your charts and go, hey, I want an alert, or I want to get in with a pending order when this happens, so that I actually take advantage of this. So, it's a very simple, most of these are kind of breakout type trades. Some are preceded by a particular action, like a prior high low taken out and then reverse, like a range break fake. Most of the time you can set this with a simple alert or an order entry trigger. Tight stops initially into the close, I think that's a must. I don't normally suggest tight stops, but I think that you don't look at it as a swing trade until it's actually, because true technicians would say this is the wrong approach. I disagree, and I could be forever arguing, but the idea is that you're getting in early on something that's highly likely to trigger, and you're saying, okay, I'm using my day trade entry, I'm keeping the stop tight, but then if it triggers, then if the daily chart actually satisfies the criteria for the daily chart pattern, I'll take it and I'll hold it for a little bit longer. Understand the overnight risk element. Of course, you're giving up risk control in some instruments overnight. And then you just set it to daily chart demand. You sit back a bit and you go, hey, I've got 2 or 3 of these things that have set up. Let me kind of, the trades are in the cruise, and relax a little bit. Let me just calm down and adjust the stop, give it a bit more width, kind of look for your target, which might be based on the setup. Maybe it's a measured move, maybe it's a key level, maybe you're trailing it, whatever it may be. So look at some examples here. This NASDAQ trade, like a range break fake, was triggered. We broke out of that, which was actually even better when they gap up and then come lower. You got the range, gaps out the range, comes down, closes the low. The technical trigger for that is when we break out through the low of the range, and you go, right, okay, I'm maybe not trading it straight away, on the day, but actually I don't need to wait right until the next day, because I'm going to get an awful entry. You trade in the last kind of hour of the trading day, you see its rejection, you can start to enter here on an idea that actually the wrong way again, the bar will trigger that range break fake, and then you look for that kind of 2 or 3 day move, and that's more effective because you can have that tight stop. And if it doesn't work and it reverses, fine, you can come out. But if you get that little leg in, and let's say you did manage to get this pop for whatever reason, I mean, it's unusual, but imagine you got something and you're positioned well, you go, okay, that's going to print that on the daily chart, that's going to look good, I do want to be involved in that. So you're kind of using that as a precursor. Another one here, like Microsoft, so slightly different idea. The outside bar reversal, that's a very common reversal pattern, right? You take out the low, then you come and you close the high, bullish. But the next day, it's fine. For a swing trader, that's fine. They do that. They wait for the next day. Their order open. But as a day trader, we can be a little bit more aggressive and go, I'll take a bit more risk. I'll take a bit more risk, right? I've seen it. I know what the daily chart's going to look like. Theoretically, if this does this, it's taking out the low, it's taking out the high in the last 15 minutes of the day, 30 minutes of the day, and we're breaking out. Maybe you take it early. Maybe you're in at kind of 220. You have a little bit of a cushion. You go, okay, I'm going to see for a day 2, day 3 play. And you're thinking, going back and thinking what the daily chart could look like. That's the key. Maybe you take a trend line break, and instead of waiting for the next day, you take it on the last 30 minutes of the day, or the last hour of the day. So it's that kind of thing. But one thing about this actually is you need to be able to screen, right? If you're taking that, the idea is that you're ahead of the game, you're looking at the daily charts, and you don't want to trade everything. So a way to do it is just to use TradingView and screen through. Now, I've put together a little list that you can easily import all the products that Pepperstone offers, so you can just scroll through. You can just go to import, download the CSV, tradesmastermind.com/list, download it. It's actually a text file, it's not a CSV. Import the list in the TradingView, and it'll be there. So it comes indices, commodities, stocks, all the products they offer on TradingView. So what you can do is you just have your daily charts, and you can just go dunk, dunk, dunk down on your mouse and just go through, and just go through, and you can scan through and go, that could be setting up. Let me go and look a little bit closer. So that's a really easy thing to do, and it's done for, and it makes it nice and easy. Okay. I think that's it. That actually took me longer than I expected, because I hope I've explained some of the things in the right way. You can see that I really get fired up by some of this stuff, because it can be so powerful when it's used in the right way. The close can be a good time to trade, scalp under the right conditions, understand the risk of that. And that end one of using the close as an early lever to position for a broader move. If you're someone who's maybe trying to expand that holding time, trying to stretch things a little bit, don't want to get caught up in screen time so much, that might be something to consider. You think about the conditions. These are all based on the conditions. VWAP magnet, that 15-minute scalp trade on the heavy down day, the hold for multiple days. It's playing chess. Like, what the next 5 moves going to be, or 3 moves? Go 3 moves, right? What are they going to be? So you start to think, okay, that's setting up on there. That's stretched away from the VWAP. We could pull back to here. So if we did this and this, so to think like strategically, like a general on the battlefield, analyzing rather than getting stuck in, being in the trenches, like, okay, let me step back and review. Let me play this game and look at where the market could be, because that's where the rewards are. It's not going to what the market's doing now. It's strategizing and thinking, where could the market be? You notice all of these are thinking, where could the market be at a point in time? And I've gone back in that, and it's almost unintentional now. The VWAP magnet is, I believe, I've started from a starting point of that the market will close at the VWAP. What conditions are a precursor for that, or identify that? Okay, what's the trigger for that? And so I've gone back from that. In the last 15-minute trade, I've started from a thesis of, I believe the market's going to close at lows. Okay, let me go back from that. The kind of multi-day trade, I've gone, I believe that we'll get a 2 or 3 day run. Okay, let me reverse from that. So I've always gone back and stepped and looked at the board from the position that I want it to end in, and then reverse back the moves into a point where, what's the first move now I can make to identify that, or what do I need to see someone else do? Candlesticks in this example, not talking about chess. That means that opens up an opportunity for me. How can you position? How can you manage the risk? Of course, got to keep the risk managed, guys. Yeah, hopefully I've emphasized that enough. All right, tradesmastermind.com/list to download that cool little text file that allows you to very, very quickly import all the products Pepperstone offer. Has them nicely segmented: indices, commodities, FX, stocks. What else have we got in there? It's all nicely laid out anyway, and you can just scroll through. It's a really good way of scanning stuff. Okay. Thank you very much, ladies and gents. I will look at the other screen and just see if we've got any questions. There's some thanks coming through. Any questions, fire away. Otherwise, we shall call it an evening and we shall move on. Oh, there's a question about that chart. Let me scroll back very quickly. Which one was it? The range break fake. Yes, the range break fake is when you kind of break out of the upper end or lower end and then come straight back in. I talk about loads, man. People get bored about talking about range break fake. If you're on Trading Plan Pro software, that's all in there. All these setups are in there, outlined in there. But it's that thing of range is there. Everyone's happy. Where's it going to go? Breaks out. Everyone dives in. Yeah, the long. Reverses, close at lows. That's a real kind of then momentum for it to break to the downside, and especially when you're in the direction of the trend. That's kind of what that range break fake is. Okay, thank you very much, ladies and gents. Miles, Dylan, Gregor. Camus, the other question coming. Let me just, what time we've got? I've got time for that. Of course I have. I've always got time. If I can help, I absolutely will. If I can't, I will try and pinpoint you to somewhere or someone that can. Question is, it's not about today's topic. I've got a question. I'm trading the Dow. I found that I try to find trade ideas every day in the pre-market prep, which of course incorrect things to do. Well, it's good that you've identified that. Good that you identify that. It might come from the fact that I trade in one instrument. I don't want to feel like I'm saying to myself, I might pass today and do nothing. I want to fix it. What's your thoughts about it? Okay, really good question. Really, really good question. And we all have this, right, at some point. And you feel like if you're sitting down in front of the screen, you want to do something, right? You feel that, especially as you feel, oh, I've got to do something, right? Especially society's conditioned us to exchange time for money and all that sort of stuff. I think you've got to kind of imagine, hey, if you are trading, I always come to this analogy, and maybe this doesn't resonate with you, maybe it does. Imagine if I came to you and said, Rowie, I think your name is Rowie. Listen, pal, here's £10 million of money. I want you to trade your strategy. So tell me what your strategy is, and you tell me, and you go, I trade this, I trade this, I trade this. Okay, great. So you trade those strategies. I believe in you and your strategies. Here's the money. I don't need to lose more than 30%. If you do, ring me and we'll do something about it. But great, off you go. So you go off, and you're sitting there and you go, I've got okay. And then you look and you go, not really the strategy that I said I was going to trade. However, I quite like this. Let me just put. I'll just risk 100 grand on this one. I'll just risk $250,000 or whatever the number would be in that proportion. Then you go, you lose money. Hey, Rowie, what's going on? How's it going? Well, actually, I lost money because I had a hunch of doing this, and I kind of went off piste a little bit and did that. I'd be like, give my money back, man. Just give my money back. You can't stick to the system. The point I'm trying to get to here is, you would never go and do that in those conditions. And the reason you kind of do that is because you think, well, I need to do something. I need to, but just think more, focused and say, hey, I've got an idea and I've got a plan. And this is how I want to trade things. And if it's not matching up to my plan, then I'm not going to trade it. Now, there's nothing wrong with flicking to a demo and punting away if your heart's content, right? Fine, if you want to do that. But one of the key things of trading isn't this stuff and the strategies and all stuff. Of course, we have to have an effective strategy and edge. But one of the keys is to be able to sit on your hands when nothing's happening. If you don't believe me, read Market Wizard's book, read the Reminiscence of Stock, or read any book where traders kind of talking about their journey. And every single one, without fail, says, listen, you need to be able to sit on your hands and not trade when you do not have a signal. So when you have that feeling, you sit down, you do pre-market prep, and you're like, I can't see anything. That's the test for you to elevate yourself above the rest of them. That's the test for you to say, hey, every other person is sitting there finding something to do. I'm elevating above that, and I'm not trading, because that is what a trader who takes this seriously would do. And see it like that. Because if you see it like that, you start to think a little bit more elevated. You start to think a little bit differently. You start to approach it and go, hey, my edge is not there. Why would I risk capital on something I've not got an edge? Now, if at the end of the week you want to go back and look a little bit closer and see if you could find some things, see if you missed something that maybe can be added to your plan at some point, that's fine. That's good. That's cool. But don't break what you decided you're going to do midway through the week. Because if you open that door and that door cracks open to you taking going off piste, so to speak, and taking risks you're not supposed to take, and taking setups and try and find substandard things, you open the door for trading on tilt. That is the ultimate thing that will just say, as soon as you let that creep in, and you start to trade like that, then what else do you do? Like, I'll just take a little bit more risk. I'll just do this. You'll get frustrated with yourself. You cannot win. So when you have that feeling, you're in front of the screen, you don't see anything, be confident and say, I do not see anything today. I will not trade today. You close your broker account. Now, if you then want to allocate, there's another thing, I allocate that time to study. I go, great, I've got all these things I need to do in my trading business. I need to research this pattern a little bit more. I need to get Excel and start to download. There's some tasks I've got to do. So if I see a day where there's nothing going on, I don't see anything interesting, maybe I'll set some alerts. Great, that's what I'm going to work on the other side of the trading business. That's what I'm going to work on, doing your homework, looking through your stats, looking through your journals, looking through your execution, looking through all that stuff, because that stuff needs to be done, and it for money traders doesn't get done at all. So see it as a blessing and go, I can still move the needle forward in where I'm trying to get to, but I'm just not executing today. And so we see that, you go, yeah, great, I can work on something else now. I can work on this, I can work on improving it elsewhere, and see it as a positive rather than flipping it as negative, going, well, I'm not going to make any money. Because actually doing that homework and doing the study and doing all the other stuff and extracurricular things that actually do move the needle are the things that are going to be more effective for you 3, 6, 9, 12 months down the line. Okay, I hope that's answered the question. I went off on a bit of a tangent there, didn't I? Thank you very much. Thank you. Everyone's saying thank you. I appreciate you. Thank you, ladies and gents. And that's resonated with you, Camus. What are the best pairs to focus on trading? If you're trading Forex, trade the pairs that match with your strategy. Don't think of, and that sounds like a question for someone who's relatively new to trading. So very quickly I'll answer and maybe help you with this. Go back from a point of what type of trade you want to become. Swing trader, day trader, and then look for patterns in the basket of the main pairs. So your main kind of US dollar pairs. That's a good place to start. But think of it as setups rather than just want to focus on these pairs. And then you go, okay, well, actually, I do like the feel of USD yen. I do like the feel of cable, whatever it may be. And then you might start to get the focus. Be a little bit more okay with spreading your vision a little bit wider at the beginning to learn kind of how these different things move. And then you might say, actually, I really like the way crude oil trades. I've not even looked at crude oil. I didn't think I'd trade crude oil, but actually I quite like that. So to do it, I think that's a better way of doing it rather than saying, so-and-so trades this pair, I will definitely trade this pair only, because I don't think that's the answer myself. All right, thank you, ladies and gents. Have a great evening. Enjoy the rest of the week. I think Martin Luther King Day actually on Friday, I believe. So take care, and I'll see you in the next webinar, a couple of weeks' time. So thank you so much. Bye-bye.